Good morning, Mark Soderberg with ADM Investor Services with a quick summary of today's August USDA production and WASDE data. A little bit of something for everyone in today's numbers. I'll start off in the soybeans because to me that looked like the biggest surprises came in the soybean complex. USDA did raise production 120 million bushels to 4.589 billion. That is a new record high and well above expectations. They did this by raising both the yield to 53.2 bushels an acre, while also raising planted and harvested acres by about 1 million. Expectations were for a little bit of a drop given the flooding rains that we saw in some areas of the northwestern corn and bean belt in early June. So production way above expectations. My estimate was the highest of them all at 4.565 billion. Even mine was a little bit too low. Old crop ending stocks were left the same at 345 million. New crop ending stocks expected to swell to 560 million. They did lower the average farm price 30 cents to $10.80 a bushel. Some modest only change on the demand side of the equation was a 25 million bushel increase in the exports despite the very slow start to date. Prices are currently down about 20 cents, about 5 or 6 cents off the lows. In corn, the USDA, they raised their production forecast 47 million bushels to 15,147. That was just slightly above the average trade guess. Yield was raised 2.1 bushels an acre to 183.1. Harvested acres here were cut 728, so a little bit bigger drop than expected. Corn prices right now are up about a nickel, so we got a key reversal day going if we can hold this type of strength. That after setting new contract lows earlier in the session. Very little change on the old crop balance sheet. That was cut 10 million bushels. Exports are up 25. Feed, seed, and residual usage was down 15. The new crop ending stocks just under 2.1 billion bushels. That was just slightly below the average estimate. USDA did lower the average farm price 10 cents to $4.20 a bushel. The changes on the demand side, we did see a net increase of 60 million bushels on demand, with feed, seed, and industrial usage down 15 million, while exports were raised another 75 million to 2.3 billion. Global stocks in corn actually came down to 310.2, and that was just below expectations. And I think likely the reason we're seeing some higher trade here. USDA finally did lower the Argentine production forecast 2 million metric tons to 50 million metric tons, more in line with what the Buenos Aires Grain Exchange has been forecasting now for months. On the wheat production at 1.982 billion bushels, that was down about 20 million bushels from the last estimate in July, and at the very low end of expectations. Winter wheat was actually increased 20 million to 1.361 billion. That was towards the high end of the range of expectations, led by hard red winter, which is up 13. It was down 2 in soft red winter, while white winter was raised 9 million bushels. But I think the big surprise in the wheat was the reduction on the spring wheat. USDA was aggressive and had record yields here in July. They did trim that back a little bit now. Production at 544 million bushels. That was about 40 million below expectations. So we're seeing Minneapolis kind of be the leader there to the upside right now. The only one that's up 2 to 3 cents, while Chicago and Kansas City futures are down 6 to 8. So higher in the corn, a little bit lower here in the wheat, and sharply lower in the bean prices, as we expected to see a bumper crop here in the U.S. with U.S. weather currently looking non-threatening. So back to focusing on weather and seeing if we can build in a little bit better demand here at these lower prices. Thanks for listening. Have a great day, everyone.